Well, good morning, or good afternoon now. Good afternoon, everyone. We are going to begin our session 1 on administering disbursements. I'm going to wait for my timer to start. Okay. So this lesson on administering disbursements, after you've gone through the whole process of making sure your students were packaged correctly, that you've awarded them correctly, you finally got to the point where you've made sure they were eligible, and it is now time to make those disbursements to the students' accounts. So what we're going to do for the next hour, and then I'll allow 15 minutes for questions, and I would prefer that you just come on up this way to me after the session is over if you have questions. And that will take up the time in here as there are no other lessons coming up after this. So when we talk about administering disbursements, this is going to be our agenda, the issues, the subject matters that we will talk about. We're going to do a disbursement overview and then talk about the different types of disbursements that there are. We're going to talk a little bit about credit balances and then disbursing by payment periods. We're going to go into detail about that. We're also going to talk about how we work with students who have lost eligibility and then regained eligibility, as far as how you go about making disbursements for regaining eligibility. And then last but not least, we'll talk about returning funds. So, the disbursement overview. First of all, we have to be clear on what a disbursement actually is. Our regulations apply to only Title IV funds. So our official definition of a Title IV disbursement is when a student account is actually credited or paid directly to either the student or the parent. So this is literally putting the money, the Title IV money, on the student's account, on their ledger, or putting the money in their hand or in the parent's hand. If you are a school that uses your own funds, if you have that privilege and that luxury of putting your money up first before you even go to G5 to draw down, the minute you put even your own money on a student's account or you put that money in a student's hand, that is a Title IV disbursement. Again, even if it's your own money. And the one thing I have to remind you is that whatever date you are paying to that student's ledger, whatever date you are putting that money in the student's hand, that is the date of disbursement, which should also be the disbursement date in COD. Many times, circumstances come up where you pay the student a little later than expected. That's okay. Whatever date you pay that student on their ledger or put that money in their hand, just go back to COD to make sure the COD records match what your actually ledgers say. Now, before we can actually make the disbursement, there are some things that still need to take place. One of them is the notification of disbursement. 668-165 of our federal regulations, it states that before you can disburse Title IV for any award year, you have to notify the student of the amount of funds that they're going to receive and how you are going to go about paying them that money, whether it's going to go on their ledger, whether you're giving them a store card, or you're putting it in their bank account. You have to let the students know how and when that disbursement will take place. In addition to that, when it comes to the direct loan or teach grant, you have to also let them know, in addition to the anticipation date and the amount, you have to let them know that even at this point of the process, they have the opportunity to cancel that loan or reduce that loan. Okay, they have to know that this is an option before you actually make that disbursement. Okay, now many schools will use their award letter as a notification of disbursement. And then there comes the affirmative confirmation or the non-affirmative confirmation, where depending on how you word your award letter or the letter that goes to the student about the disbursement, you will be able to either use that award letter as your notification, because unless the student or the parent replies to you, everything that's on there goes. Now, if you have an affirmative type of confirmation, that means that you're going to need that signature on that page and that notification returned to you. So it's up to you as an institution to determine what type of procedure you're going to put in place. Whereas you want the student to respond to you about this disbursement, or whatever you send them in the notification is going to be what it is unless they respond to you. Secondly, there are authorizations. Authorizations are needed in order for you to use those funds to pay for those allowable educationally related expenses or charges that are outside of the regular tuition and the fees, the room, and the board. Okay? You will also need the authorization if you are dispersing electronically to a bank account. Anytime you do anything electronically, anytime you're doing something that will allow you access to a student or the parent's financial information, you have to have an authorization in file for that as well. An authorization must also be obtained prior to disbursement if you are paying up to $200 for prior year charges. And we'll talk about that a little more when we get to credit balances. Okay, so there are policy considerations that must take place as far as who is going to actually send those notices and the authorizations to students. Are you going to do this electronically, or are you going to do this by paper? Are you going to have affirmative confirmation or non-affirmative confirmation? Okay, all of this must be decided beforehand because your financial aid and your bursar's office should be working together on this. Something else that has to be mentioned is that when it comes to authorizations, even if the student or the parent gives you authorization to actually take money or transfer money into accounts, at any point in time during that award year, they can come back to you and say, you know what, I changed my mind. I don't want this authorization to be in effect anymore, which means that you will have to invalidate that authorization. The student has the option to change their mind at any time after the authorization goes through. So, when you made a determination about your students, when you looked at all that information, when you devised that award letter, when you budgeted for the student, you did a lot of work before you even got to the point of disbursing. But what we're saying here, as part of our regulations, that right before you disperse the student, you have to check to make sure that student is eligible again. A lot can happen from the time that you've awarded the student or you've completed all their files, their paperwork. A lot could happen from that time to the time that they sat in the class and you actually came around to making a disbursement. So before you can actually disperse any Title IV funds, you have to make sure that student is still eligible. You're making sure that the ISR is valid, that there is an official EFC. I mean, this student could have been selected for verification, and that verification process could still be going on. There could be a code on there. There could be comments on there that would not allow a student to receive funds until those issues were cleared up. So you're checking on all of that information before you actually make the disbursement. You're making sure that student is a regular student, a citizen. They're making SAP. Okay? And this rule applies not only to the institution, but it also applies to the third-party servicer that you have working for you. When we're working with disbursements, you should be very familiar with our funding systems. One being COD, which is more of a database that holds student information, and then G5, which is the actual payment grant system. COD, as I said, is student specific. We're looking at the current funding levels. As you increase your students with anticipated disbursements, the current funding levels will increase. you are required to substantiate all of your students in COD when you're making your disbursements out of the G5 system. So whenever you draw out of G5, you will always have to pull in records from CD to substantiate whatever you draw down from the G5 system. The G5 system, as many of you already know, is program specific. It's only looking at the programs. We're looking at the authorizations. So as you increase your students in the COD system and they're processed, once it hits G5 on that anticipated disbursement date, the authorization will be increased for your institution, and then you are able to draw down those funds. Let's talk a little bit about the different types of payment methods, because this determines your time frame for when you work with the COD and the G5 system. Many of you, when you began, if you were around from when your school first opened up, you were placed on the advanced payment method, which means basically that you have free range to draw down from G5 at any time you want to. Okay, this allows you that option to draw down because you're reporting records in COD, and on those anticipated disbursement dates, that money is going, well, those students are transferring to the G5 system as far as amounts are concerned, and then you're allowed to draw down the funds from the G5 system. Once you draw down that money as an advanced pay school, you have 3 days to make sure disbursements get to the student's account. You have 3 days to make sure that money gets to the student's account or their ledger. You also have 14 days to pay any credit balances that are remaining after all the charges have been paid up. Okay? When we talk about 3 days, we're talking about 3 business days. Okay, 3 business days. So you're going to watch the timing of when you're actually making these disbursements. If it's near the weekend, think about counting 3 business days, which means the student will not get the money on Monday if you're doing this on Friday. You're making sure that this money is going to them before that next Wednesday. Okay? Likewise with the credit balances, you have 14 days, but this is 14 calendar days. So it includes the weekends to make sure any credit balances are paid to the student. We give you an example of the flow chart of how disbursements work under the advanced payment system. So once you draw down out of G5, you deposit into the federal funds account. From this point, you have 3 business days to make that disbursement. You go about making those disbursements. Depending on the student's circumstance, it could be early, late, retroactive. You're reporting or you're substantiating your drawdowns in COD, which means that if the students were already in COD, you're going back to make sure that all of the records match up as far as dates are concerned. So you're substantiating the drawdowns from G5. Okay. You apply it against the institutional costs. Whatever's left over is a credit balance, which you are paying to the student within 14 calendar days. If for whatever reason there's a reason to question how you actually go about making disbursements, or there are any other administrative capability issues that might come up in audits or program reviews, the school could be placed on heightened cash monitoring 1. Now, this is the most lenient method of cash monitoring, whereas you still have access to the G5 account. You still have access to make payments to the student. What must take place first is that you are making the disbursements before you draw the money from the G5 system. Okay? So you're literally applying disbursements to a student's account. So this is a paper disbursement trail that you're keeping. Technically, this is institutional funding. And then once you pay the student or you make that disbursement, then you can go into G5 to draw down the money for the school. Okay? And this is to ensure that because we're monitoring, because there's a reason to watch how the institution is paying students, we're saying make sure your students are in order first, make sure you apply the disbursement to the student records first, then you draw down, and that keeps a nice clean trail. That's the reason for heightened cash monitoring 1. So if you're disbursing to the student's account, remember, you haven't drawn down the money yet. But if you disburse and a credit balance occurs, you are still required to make that credit balance payment to the student within 14 days, even if you have not drawn down the money yet. Okay? You are still reporting disbursements in COD. That's like your back-end check. And then last but not least, you're drawing down the money from the G5 system. Heightened cash monitoring is giving the school the opportunity to correct whatever the issues were. Late audits, problems in the audit, program review findings, excess cash issues, not paying R2T4 on time. This is giving the institution the chance to correct these records on their own before you're switched to another method of payment. So hopefully everything is taken care of within your own school system under heightened cash monitoring 1. But if not, then the department will come back in and place the school on heightened cash monitoring 2 or reimbursement. Usually reimbursement happens after a program review or a very serious audit review where there are many findings. Under this method, the school is placed on a temporary stop pay where you can no longer draw down funds out of the G5 system. You no longer have access to your money. The only way you can receive money from the G5 system is by disbursing money on the student's account and then sending those records into your regional person. Wherever you go to for eligibility, for recertification, you go to your regional office with those records, which means there's a time frame involved in here. So not only are you disbursing to the student's account, you're making copies of the student ledger and any other documentation the department asks for to prove that this student is eligible for this disbursement. You're mailing this information to the school, to the department rather, and then the reimbursement analyst, the payment analyst, looks over all of your information, and then they go into the G5 system to pay your school. So as you can see, there's going to be a lag in the time frame that you actually receive the money. You're usually a month behind in payments when you're on heightened cash monitoring or reimbursement. Under reimbursement, you're required to send all of the student records in. It would be that serious, where you have to send everything in, have it approved by the department before the department makes the payment for you. So I mentioned earlier that we cannot have excess cash, which are disbursements made outside of 3 days, 3 business days, and we cannot have excess credit balances that go beyond 14 calendar days. Those are the 2 important issues, the important areas that will cause a school's monitoring to change very quickly. And I'm speaking from the perspective of being a program reviewer before I was a trainer. This is your disbursement and your funding process. So we have Pell and we have direct loan. We have our financial aid systems reports. We're reporting Pell, we have actual disbursements. We're reporting direct loan, we have actual disbursements. We're reporting these disbursements no earlier than 7 days prior, no later than 15 days after. COD reports are accepted and recorded to the G5 system for Pell. COD is accepting records and you substantiate for the G5 drawdown for direct loans. When it comes to Pell, the G5 system will then generate the Pell funds for those actual disbursements. So this is a process that's followed from your records to our systems in order to get that money to the student. When we talk about direct loan disbursements, there are two areas of restriction. One is that 30-day delay for that first-time, first-year borrower. These are usually new students. They're new to financial aid. They're new to receiving loans. They're still not sure what loans are all about. They're still not sure if they want to be in school yet. So there's a required 30-day delay for our first-time, first-year borrowers, where you have to wait 30 days after their start date before you can actually disperse direct loan funds to them. And this applies across the board unless you have a cohort default rate that was less than 15% for your 3 most recent fiscal years. Also, single-term loans. There are times when a student will take out a loan for just 1 term. But even though it's 1 term, the disbursements are still required to be split in half. They have to be substantially equal. Okay? Again, this is a requirement unless you have a cohort default rate that is under 15% for the 3 most recent fiscal years. Now, we're not going to talk about modules in here. This is a whole nother monster. It can take us about 2 hours to even walk through modules. But when it comes to disbursements, we have to make sure we make clear that a student who is enrolled in a module type of program within a payment period, they're enrolled for that entire payment period. Okay? So the loan period is going to be for that entire payment period. Okay? That enrollment is for the entire payment period. But when we look at the cost of attendance, if the student is not in a particular module, you're excluding that module from the equation. And disbursements also cannot be made, or they can't even be scheduled for periods of non-attendance. Okay, so for all reasons, we're looking at the payment period for disbursements when we're talking about modules. But you're not charging them attendance for the full payment period if they are not in class, if they're missing a module, and you're not dispersing when they're not in a particular module as well. You can, in module situations, make a single disbursement based on the enrollment status for that term. But that's as long as the student begins classes for all of their credits. They have to at least begin attendance for all of the credits that were contracted for. Okay, this is used to establish that enrollment period. So they have to begin in all of the classes. Okay. When there are changes in the enrollment status to less than half time, that will result in cancellation of any subsequent loans. Notice I said any subsequent loans. Okay? And this only applies to module situations. Now, you can choose to schedule multiple disbursements throughout the entire payment period, as long as you are not exceeding the loan limits or the awarding for that year, okay, for that particular payment period. And again, this is applying to modules. So with that being said, and that really covers your basic disbursement, which is your normal disbursements, let's take a look at the early, late, and retroactive disbursements. So the normal disbursements are your regular disbursements. We've already discussed that. The early disbursements are before the first day of classes. When we talk about late disbursements, we're talking about students who are no longer in attendance at school. And when we talk about retroactive disbursements, these are late disbursements, but the student is still in school. So let's look at early disbursements first. The earliest you can disburse your student is 10 days before the first day of class within that payment period. And that's for any type of program, whether you're credit hour, non-term, non-standard. you can make a disbursement 10 days before the first day of class in that payment period. Now, for credit hour programs in a module environment, you can make payments, again, 10 days before the student starts class. But if you are a clock hour institution, if you're a non-standard, if you have programs that are not substantially equal in length, the date the student completes that previous payment period is when the student can receive their funds. So you can make a payment 10 days before the first day of class, or the date the student completed the previous payment period, because of course with non-standard terms, with clock hour programs, the students have to meet the hours in the weeks before you can make any subsequent disbursements. Okay, so early disbursements 10 days before the first day of class. But if a student does not begin in any of the classes, they're considered no-shows, which means any money that was applied before that first day of class must be returned. Any direct loans that were credited to the student's account, that must be returned as well. But if you disperse direct loans directly to the student or to the parent, you can choose to return the funds yourself and then collect from the student, or you can choose to just notify the servicer and let the servicer take on the responsibilities of collecting from the student, because it's already been dispersed to them, so they're under the normal payment rules. Let's say a student fails to begin attendance in 1 or 2 classes. When we're talking about Pell, when we're talking about the Iraq-Afghanistan Service Grant, when we're talking about the Teach Grant program, you are required to recalculate based on the classes that the student is in attendance for. So again, you're paying early. First day of class comes, the student doesn't start all of the classes, you have to recalculate. This could cause an overpayment on behalf of the student, which means the student will be responsible to return any ineligible portion of that disbursement. Okay. You can also update any future disbursements, so you can make any adjustments to any future disbursements to take care of that overpayment as well. So this again is for early disbursements. When we talk about direct loan, and we're talking about students who begin attendance in less than half-time after they contracted for full-time enrollment, if you disperse loans up to 10 days prior to that start date, you have to ensure that that student is at least at half-time status, which means you're doing another check for eligibility. If they begin attendance in less than half-time, as less than half-time students at that point, you're going to adjust any subsequent disbursements, okay? Let me rephrase that. Any subsequent disbursements cannot be paid, okay? That first disbursement that was made, that's going to be paid back according to the regular standard rules. You notify the servicer and let the servicer get in touch with the student to handle that direct loan. But any subsequent disbursements cannot be paid unless that student adds on more classes to become 3/4 time or full time. That was early disbursements. Let's take a look at late disbursements now. As I already said, if a student becomes ineligible to receive Title IV funds, if a student is no longer enrolled in school, okay, and that would cover students who are less than half-time if they're receiving direct loans, or if they're no longer enrolled for any other program. That's when late disbursements could take place, okay? Anytime the student starts class, they're eligible for funding. Just because funding was not given to the student, just because you did not disperse the student and they withdrew or they became ineligible, does not mean that they are not eligible for some of that money. They have still earned some of that money, and that's why it becomes a late disbursement. When you're making a late disbursement for a student who is no longer eligible, no longer in school, no longer enrolled, we are making disbursements to be used for educational expenses that were incurred while they were enrolled and eligible. That's all that can be paid. Now, if a student is eligible and they completed the period, you have to provide that student with the choice to receive a late disbursement. Okay. Remember I talked about those notices. The notices and authorizations still apply in the case of late disbursement. So you're still notifying the student or the parent that there is a late disbursement coming in. Do you want this disbursement? And you will allow them to reply, or if they do not respond to you, you will automatically make the disbursement. Late disbursements can be made no later than 180 days after that student became ineligible. 180 days, okay? Think about all the other time frames that might tie into this. Let's say if a student has verification issues that need to be corrected, or any other requirements that were supposed to be met by a certain time. All of that still applies and it still takes into account even though the student is no longer in enrollment. But the drop-dead date for making late disbursements is 180 days after they became ineligible. If the student did not complete the period, a disbursement is being treated as a post-withdrawal disbursement, and that falls into the R2T4 rules. Before you can process a late disbursement, you must check one more time to make sure you have an ISR, you have a SAR, you have an official EFC on that ISR or that SAR. You also have to already have the origination record within your system when it comes to direct loans and teach. It must already be originated. You cannot originate a loan after the student becomes ineligible. And when it comes to SEOG, you have to make sure the award has already been given before that student became ineligible. You cannot all of a sudden, even if you award campus-based at the end of your year, you cannot award a student SEOG after they became ineligible, just to get them in there. Now you have the option of dispersing or not when it comes to direct loans in certain circumstances. Let's say the student did not withdraw, but they are no longer enrolled in at least half time prior to making that disbursement. You may still make a late disbursement because remember, when they started school, they were contracted for more than half time. So they are actually due funds as more than a half-time student. But just because they became ineligible, that doesn't mean that they're not due any funds. Okay, so you have an option of either paying or not paying a student that falls below half-time. And if you choose to make a late disbursement to a student who has ceased to be enrolled at least half-time, it cannot exceed the educational costs. Okay, they cannot be paid for anything more than that. You are absolutely positively prohibited from making late disbursements of second or subsequent direct loan funds unless that student has graduated or completed that loan period. You cannot pay a late disbursement to a first-year, first-time borrower who withdraws before that 30-day restriction that I talked about earlier. A late disbursement for Title IV funds cannot be made if you do not have a valid SAR or ISAR. So if there have been issues with the ISAR all this time and the student is no longer eligible, if that ISAR is not valid at that point, they cannot receive Title IV funds, period. And they can definitely not receive any funds if that ISR is not in your hand by the deadline established by the department. And I already mentioned that 180 days is the drop-dead date for any late disbursements. With that being said, let's take a look at post-withdrawal disbursements. This comes into play when we're talking about R2T4, where the money that was earned by the student is more than what their costs actually were. You as an institution must offer those extra funds back to the student. And this happens through the R2T4 calculation in step 4. Okay, it will let you know if a post-withdrawal disbursement is due. And of course, if that's the case, you will go ahead and go through the regular process of notifying the student to make those disbursements. You will provide written notification within 30 days of the date of determination of withdrawal. And this falls in line with the regular R2T4 deadline dates. Okay, these are the same rules that apply to regular R2T4. You're dispersing directly to the student, but no later than 45 days, and that's calendar days, after the date of determination. And you're dispersing as a credit to the account within 180 days after the date of determination. Again, these are the normal R2T4 deadline dates, so nothing is new here. Okay. When we're looking at loan funds, again, the same rules are applying. The only difference is that you have to receive confirmation that they want that disbursement. Those are the normal notification rules. Let's talk about retroactive disbursements right now. Again, I said that retroactive disbursements means that the student is still in school. Okay, it's just that for whatever reason, maybe it was the systems, maybe there were problems with the ISR, maybe there was problems with conflicting information, or verification has not been completed yet, and you're not a school that pays the student in-term disbursements before verification is complete. If any of these issues take place and then they are cleared up, that becomes a retroactive disbursement. You are allowed to make a retroactive, or it's still a late disbursement at this point, of Pell Grant funds based on the enrollment status for the work that has already been completed. Okay, now just think, this can happen at the end of your payment period. This can happen in the next payment period. But you must check, go back and check that that student is eligible. But the money that they are receiving at this point is based on the calculation on the enrollment status for the work already completed. And this includes earned Fs, and we're not looking at drop courses here. When it comes to direct loans, you can make retroactive disbursements based on the calculation of the enrollment status, again, for the work that was already completed. Okay, so that's one other check that you have to do before you make a retroactive disbursement. Let's talk about credit balances now, because you've made the disbursement to the student. They've paid all of their tuition and fees, anything that was on their account, but there's money left over now. All allowable charges, including the tuition fees, the books and supplies, that's all taken care of. So now you have a Title IV credit balance. You are allowed to pay, again, if you had that authorization, you are allowed to take that credit balance to pay prior year charges. But you can only pay up to $200 in prior year charges with an authorization from the student or the parent. In determining what a prior year actually means, that you can actually pay up to $200 of the prior year, that depends on the funds that were received. If that student only has direct loans, we're looking at the loan period. So the prior year would be the prior loan period. If the student does not receive direct loans, but they have all the other Title IV programs, we're talking about the current year, okay, that current award year. So the prior year would be the prior award year. That would be 18-19 in the case of now. If the student received both Pell, direct loan, and any other Title IV aid, you can make a choice of using the loan period or the award year to make a determination as to what the prior year charge is. Now, usually we tell you what the definition of a credit balance is at the very first slide, but I'm putting it here just to remind you that it occurs when the Title IV funds exceeds the payments that needed to be made for that student. And this is what that looks like. So here we have institutional charges, we have credits to the account, which yields a Title IV credit balance. Notice that this Title IV credit balance does not include the scholarship. The scholarship is not Title IV. So we are not holding you responsible to paying back that scholarship if it was left over in that 14-day period. It makes your process easier if you apply all credit balances to the Title IV credit balance rules, because everything will be paid back within that 14-day period. But we do not hold you accountable for anything outside of Title IV funds. So a Title IV credit balance is the only thing that applies to that 14 calendar day rule. It's best to get your authorizations and your notifications at the beginning of the financial aid process that you have the students go through. That way you have it on account. But if for whatever reason you have no authorization to hold those funds, you are required to make that payment and document it within 14 calendar days. Now, if you paid the student an early disbursement, you are paying that student 14 calendar days as of the first day of class. If that credit balance is only $1, we don't ask you to do anything with that. You can just leave that on the account. You do not have to pay the student $1 because it costs more to get that dollar out than to just leave it on the student's account. I mentioned in the authorizations that a student or a parent can give you authorization to hold credit balances. That's a voluntary situation, so at any time, a student or a parent can change their mind. Okay? They can change their mind. If they give you authorization to hold that credit balance in your bank account, you have to make sure you can identify that specific amount for each of your students. It's going into a subsidiary ledger, but you also have to maintain cash in that account that equals the credit balance amount. Okay? It cannot be just the credit balances of your students in that account. You have to have a match for that amount. And any interest that is earned, you are allowed to keep. A credit balance is considered to be paid on the date that you actually mail the check to the student, which means you're documenting that you mailed that check to the student, or you initiate that EFT, that electronic funds transfer. A credit balance is considered to be paid once you notify the student within that 14-day time frame that the funds are available to pick up at your institution. Okay? That's when credit balance is considered to be paid. Now, we already know that students may not always come right away to pick up their checks. You can hold their money for 21 days from the date you notified them. But that is still considered to be within that 14-day rule. And if that student does not pick up that check or that money within 21 days from notification, you're going to return that money to the department. Okay. You are required to release any remaining credit balances when we're talking about loan funds by the end of the loan period, or for the other programs by the end of that last payment period in that award year. Right, so your credit balances should be cleared up by then. Now, the student or the parent may give you permission to do certain things. They'll just say, keep it, I don't want it back. You can use it for the next bill that comes up. You are not allowed to go outside of any of the guidelines. You cannot pay more than $200 for prior year. You cannot hold on to the money for more than the loan period or the award year. Okay, it has to be cleared up by the end of these periods, even if the parent or the student gives you permission. Now let's talk about disbursing by payment period. Except for federal work-study situations, you're paying Title IV disbursements, equal installments on payment period basis. Okay? You can make that prior year, that retroactive disbursement during that payment period as long as the student was eligible, as long as they were enrolled during that prior payment period. Okay? And that's part of that whole eligibility check before you actually make a disbursement. Another important issue that has come up when it comes to payment periods is that proration. Many schools assess charges for more than a payment period. When we're talking about credit balances, those Title IV credit balances, the student may need that credit balance at the end of each payment period. They're awarded by payment period. Credit balances occur by payment period, which means they should get that credit balance for that payment period. But if a school is charging for the whole year, they're going to have a higher balance that's due to the school in the first payment period than they will for the second. So with that being said, if you are an institution that charges for a period that's longer than the payment period, you must prorate the allowable charges for the payment period. Okay? And this is something that has been going back and forth since this rule has come out, but this is the final decision on this ruling. And that means basically that you are assessing charges in substantially equal payment periods. Of course, there's a formula for doing so, and this just gives you an example of a student that charges for the entire enrollment period or the entire award year. It must be divided in substantially equal charges. That way, the awards that are paid by payment period and any credit balances are applied to each payment period, and they are equal. Another issue that has come up is dealing with the books and supplies when it comes to this proration by payment period. Now, if your books and supplies are considered institutional charges, they're a part of the tuition and fees, which means they must also be prorated. Okay, they also have to be prorated, even if those books and those supplies are meant to apply to the whole time that the student is enrolled. Books and supplies are considered institutional charges if the student does not have a real and reasonable opportunity to purchase that material anywhere else. Okay? That means that they're not available in your bookstore, they're not available in a convenient, unaffiliated place, and no real and reasonable opportunity also means that the materials are included in the enrollment agreement. Okay, so books and supplies must also be prorated. They are considered to be included in tuition and fees, and this is allowed in these particular circumstances that you see on the screen. You've made arrangements with the book publisher. They're available to students for competitive prices in the competitive market. There's an easy way for the student to get those books and supplies by the 7th day of that payment period. And there's a policy that allows the student to opt out of getting their books and supplies from these places. Okay? So these are all the old rules that came out. Nothing has changed here, even though we've gone back and forth in making a determination whether or not to include books and supplies, because this is what was asked of from the community. This is the final rule, which has not changed from the original electronic announcement that came out. Let's talk about what happens when students regain eligibility. If a student regains eligibility, they can still receive their Title IV funds. Okay, they're still eligible for money during that payment period or that period of enrollment for direct loan funds. Let's look at the different circumstances. If there was a default issue, if there was an overpayment issue that stopped that student from receiving funds, they are allowed to receive Pell, Teach, and campus-based aid beginning with the payment period that the issue was resolved. When it comes to direct loan funds, they're eligible for the entire enrollment period, that's usually their loan period, that the issue was resolved. They do not have to wait until the next award year or the next loan period. They're eligible right then and there in that period that the issue was resolved. When we talk about drug convictions, if a student regains eligibility from this particular issue, again, with Pell, Teach, campus-based, their eligibility begins with that same period that the issue was resolved. Okay, for direct loans, we're looking at the entire period of enrollment, which is usually the loan period. When it's resolved, they are allowed to receive funds for that entire period. When we're talking about SAP, again, as soon as the student meets the requirements for SAP status, they are eligible to receive their funding. Okay, we're talking about the payment period for Pell, Teach, and campus-based. We're talking about the payment period as well for direct loans here. But when it comes to citizenship, when it comes to selective service, when it comes to Social Security, when it comes to that identity of the actual student, if they had lost eligibility and now they have regained eligibility, they are eligible for the entire award year in which those conditions have been met. So as soon as you get that ICER that says they are now eligible, they can receive money for that entire award year. Even if they're at the end, even if it's June 30th, they can receive money from July 1 of the previous year up until June 30th of the current year. And let's talk about returning funds now. You are required, as you already know, to return any unearned funds to the department, except for the federal work study. Anything that you cannot disperse to a student because they didn't come and pick up their credit balance checks or their money has to be returned. Now, if an EFT is rejected, if that student or that parent did not accept that check, it went to a bad mailing address and it comes back to you, you've made additional attempts to disperse those funds to the student and you've proved it in the student's file, you have to make sure that return of Title IV is made not later than 45 days after the money was rejected, after it came back to your school. You have 45 days from that point to return that money to the department. Now, if you send a check to the student and it's not returned, you're not responsible for that check. It's still out there somewhere, but you notice as you're balancing your books that that money is still on your account, which means they did not cash that check. You have up to 240 days to allow that check to be cashed before you return the money to the department. So again, that's only if you're mailing the check to the student or the parent and it's not cashed. It sits out for 240 days. If they do not cash it, that money is still sitting in your account. You have to return it on the 241st day. Just like we have specific definitions of when a disbursement takes place, we have a specific definition of when funds are actually returned. When you've deposited or you transferred into the federal funds account, or you've initiated an EFT to the department, that's considered the date that you return those funds. When you make those downward adjustments of those disbursement records in COD, that's when you are returning funds to the department. Okay? So you've transferred the money into the account, you've made the downward adjustment in the COD system. That's a refund. When we talk about returning direct loan funds, sometimes the student will say, I don't want all of that money. So they say, send it back to the department. I don't need the money for whatever the reason is. You are required to return that money through G5 within 120 days of disbursement. Okay? If it is more than 120 days, when they decide that they don't want this money anymore, it goes back to regular disbursement rules, regular rules for dealing with direct loan funds. You direct them directly to the servicer at that point. So anything under 120 days, you return it through G5. Anything after 120 days, they have to deal directly with the servicer. It's no longer an institutional issue. Calendar days, yes, calendar days. Unless we say business days, it's calendar days. If you have to return funds because of any other issues that have come up, maybe through audit, program review, errors, you have to return it through G5, even if it's more than 120 days. And this happens when program reviews come up. They're looking at prior years. Sometimes we have gone back 5 to 10 years. If issues have come up where money was supposed to be sent back, we will open up those years and the money will have to go back through G5 into those accounts. When we talk about overpayments, again, we looked at that R2T4 issue. There are school errors, there are student errors that will cause an overpayment to take place. If it is a school error, we're looking at unresolved over awards. We're looking at failure to complete verification, where you've already paid interim disbursements, where you've miscalculated the cost of attendance, where you've overpaid the loan limits for whatever the reason is, application errors, miscalculations of R2T4. There are a number of reasons for overpayments to occur that are considered the school error. In order to correct those Pell Grant overpayments, you can either reduce the next award, the next disbursement for the next payment period. The school would also have to repay the amount for which it is responsible. But you can also repay for the student. Again, this is if it's a school error. Okay. In correcting direct loan overpayments, if the loans have not been fully disbursed, you can adjust the next disbursement in the COD system. If it has been fully disbursed, when it is discovered, no further action is required. Okay, the student will just go ahead and pay that according to the normal terms of the promissory note. Now, if it is a student error, you're notifying the student that they are in an overpayment situation, but you're also notifying them that they must pay back this money or they will lose Title IV eligibility in the future. If the student comes back and says, hey, we think you made a mistake, this can't be right, you are required to take another look, to review that situation, to look at the student's claim, to make sure everything you said is correct. And again, in notifying the student that they have to pay this back, you may take it upon yourself to pay it back on behalf of the student. That's okay. When it comes to returning excess cash, there are no new rules. It goes back to the cash management electronic announcement in 2017. Anything exceeding $500 must go back to our procurement system. That's in G5. G5 is for all of U.S. Treasury. That's our procurement system, and you have to return it to HHS if it's over $500. Of course, you're explaining what the refund is for. You are making sure it's identified as U.S. Department of Education, Federal Student Aid, because this procurement system involves anything that comes from the U.S. Treasury. It could be from any department, any area, and you're including your DUNS number on it. With everything that was just shared, our list of resources are here in the handbook, the federal regulations, and our contact information. Our contact information, as far as COD is concerned, is here. Ask a Fed. That is where the training officers will be available to answer any questions you may have. I mentioned that I was a program reviewer. I was a program reviewer for about 20 years. I switched to the other side. I am now sitting at the Ask a Fed desk to answer any questions you have during the week. If you don't already know, Ask a Fed is down because all of the trainers are here, so there's no one to answer the questions. But it will be back up on Monday morning. You can send in any type of questions that you have. We prefer you to go to Ask a Fed as opposed to sending individual emails or making phone calls. So anything you have questions on, you can direct it to Ask a Fed or the COD support. With that being said, that is the end of this session. And if you have any questions, you're welcome to come up to me to ask those questions so we can get this time in. Otherwise, thank you very much and enjoy the rest of your session.